My name is Trevor Gravink, and I want to talk to you about DSCR HELOANS for real estate investors. This allows you to access equity like a pro. You don't need to refinance. There's no W-2s. We qualify you just on rental income, and it's a standalone on the actual property. So what I'm going to cover today, what is a DSCR HELOAN? What are the loan requirements? What's the formula to calculate it? The pros and cons of a DSCR loan? A simple scenario for $100,000, how DSCR HELOAN interest rates are determined, and then how to be able to get one if you want to potentially move forward. So this is just a quick disclaimer. Loan requirements and guidelines do change, and there may be lenders that offer other programs. So make sure that you always speak with a DSCR loan expert before putting in offers in on homes if you're going to be doing a purchase, or if you're talking about a HELOAN or a refinance. This way, your terms will be based on the current market and your specific scenario. But we'll go ahead and get into basically the generics of a HELOAN. So what is a DSCR HELOAN? It is a home equity loan based on the debt service coverage ratio, or you might hear it as DSCR. This means you're qualifying using rental income only. We don't need tax returns or W-2s. This is ideal for investors seeking cash out without having to be able to refinance. And really, it's simple, fast, and it's investment focused. So what is the DSCR formula and how is it calculated? This is for residential 1 to 4 unit properties. If it's commercial, so 5+, it can be slightly different than this, but we're just going to stick to residential right now. And that just means that it's the monthly rent divided by the PITIA, which is principal, interest, taxes, insurance, and association fees. So essentially, you would just take your rents and then you would divide it by all of these costs. If you don't have an association, then you wouldn't have to worry about that in the calculation. The minimum DSCR for a HELOAN is 1-to-1. This means that the payment for your first mortgage, taxes, homeowner insurance, association dues, and the HELOAN payment cannot exceed what you receive in rental income each month. Now, the ideal ratio will be 1.25 plus. So 1.25, that means that you receive $1,250 in rent for every $1,000 of your combined housing payments. So the lowest minimum credit score to qualify in most cases is 680. Every once in a while we can get exceptions. And then you can see the loan amounts over here to the left. So we have 100,000 to 500,000. If your credit score is 720, we can go to up to 80% combined loan to value. So that means your first mortgage plus your second mortgage cannot be above 80% of the actual value of the property. If you have 680 credit score, then we will only go up to 70% and so on. So 350,000 to 500,000, 75%, 70%, 65%. You don't have to know all of this. You can always reach out to me. We can run through the scenario and figure out what your maximum loan amount could be, but just to give you an idea of how it works. The lowest minimum loan amount on a HELOAN is 100,000, and the maximum loan amount is 750,000. The eligible property types are single-family residential homes, 1 to 4 units, planned unit development homes, warrantable condos, townhomes, and then if you have one that's a 5+ unit, there's other seconds that might be available. It's just a matter of we'd most likely have to do something on bank statements and not the actual cash flow of the property. The eligible borrowers are going to be U.S. citizens and permanent resident aliens. With the HELOAN, you can have a 30-year fixed term, a 20-year fixed term, a 15-year fixed term, or a 10-year fixed term. So what are some of the pros of the DSCR HELOAN? You can access your equity without having to touch your first mortgage. So if you purchased or you refinanced when rates were low, you don't have to worry about touching that. Zero income documentation, so we're not going to ask for tax returns. All we care about is the lease agreement that you have, or if it is a short-term rental property, then we just want 12 months history of what the actual property has earned. Now, they offer rates, 30-year rates from 8.5% up, and this all depends on several scenarios, which I'll get into in a moment. And then you have flexible prepayment or refinance options. Some of the cons might be that this is a higher interest rate than maybe some of the other home equity line of credit options that you might be able to find if you did a full documented loan, meaning your taxes, W-2s, all of that. With this, we need a 680 credit score minimum with home equity lines. If it's a full doc, you can potentially go lower than that. These can have prepayment penalties from 0 to 5 years. So make sure that whoever you're speaking with, you actually know what you're getting into as far as a prepayment penalty, and then potentially higher appraisal fees because a 1007 is needed. And a 1007 is an additional piece of paperwork that basically just looks at other properties that are like yours that are currently rented and what the actual average rent is in that area. So they're getting the value of the property on the appraisal and then what the estimated rent should be on a 1007. That way, if your lease is older and you really should have had higher lease amounts at this point, you may benefit from that. Or if you're charging a lot more than what's standard in that area, then they'll usually use what's lower on the 1007. It depends on the scenario. So again, that's something to be able to discuss. So let's just use a 760 plus FICO score, a single family property. Obviously it's non-owner occupied or being an investment property. Let's say it's valued at $700,000. The combined loan to value is 75%. And then this would include a 5-year prepayment penalty and a DSCR of 1.25. Now with that scenario, the monthly principal and interest payment would be approximately $822.68. Cash out after the cost of the loan, you'd be getting around $93,186. The interest rate, given today's market, is 9.25% with an APR of 9.976. The total cost that could be rolled into the loan, so you're not going out of pocket for this, would be approximately $6,214. That's including discount coins, underwriting fees, title fees, and appraisal. So there's 0 out-of-pocket fees in this scenario. Now, obviously, you want to speak to somebody about your individual scenario. So rates, payments, and costs are going to vary. That's why you want to request an official loan estimate. It's going to be subject to the property valuation, underwriting, and borrower qualifications. But that's just to give you an idea of what the numbers may look like. So DSCR HELOAN interest rates are determined by credit score, property type, the prepayment penalty length, the ratio of the actual property, the combined loan to value, the loan term, the loan amount, and then if you sign up for automatic payments with the lender. And once we have all of these pieces of information, then we can quote your own rate, and we can talk about the different rates and what you qualify for, and then how you can buy the rate down with discount points and what that means in the principal and interest payments. Now, as a mortgage broker, I work with 100 plus DSCR lenders that are at close reach. So when we get all those pieces of information, then we use a pricing engine to be able to price out the best option for you. So we price your loan. That way we can do all the shopping and make sure that we're getting you into the best option. We're getting into the best rates and into the best fees. So obviously you want to know you're working with somebody that can definitely help you out and does take care of their clients. I'm looking for a long-term relationship with all the investors that I work with. So obviously I try to make sure that you have a 5-star experience, and that means in my communication with you, and my rate and my fees, and that we close on time. You can research me on Zillow or Google. You can read my client reviews on there so you can do some of your due diligence. The links will be below in this video in the actual description area. If you have questions about DSCR HELOANs or DSCR loans or anything to do with mortgage, you can reach out to me directly on email or cell phone. My email is trevor@rehorbuddy.com. You can also reach me on my cell at 858-463-8169. All of that information will be in the description of this video. If you did this video, please go ahead and give me a follow. And if you have any questions, you can either put them in the video questions below in the comments, or you can go ahead and shoot me an individual email. Thank you, and I look forward to speaking with you.